All right, so imagine you are with your best friend and you're watching on a Tuesday night, and of course on Tuesday night you have Shark Tank. So it's interesting to watch the investors. You're thinking these are investors, billion-dollar company owners like Mark Cuban, Mr. Wonderful, and the first questions they ask about an investment are, how much did you sell and how much did it cost you to make? I think that's really interesting because that's only like the top third of the P&L. It's the very, very start of it, but that's where their return is going to come. We've got to sell stuff and we've got to make money on the stuff that we sell. So those two first questions are absolutely key. What did you sell and how much did it cost you to produce? Now, when we talk about cost of goods sold, we're talking about that second question. How much did it cost you to produce? That can entail a lot of things. If I'm a reseller, I'm going to go buy inventory from someone else and then I'm going to sell it. On our income statement, that cost of goods sold then is the cost of the inventory that I've sold. Now, if we actually make it, if we're a manufacturer or a producer, that's going to be a little bit different because we're not buying inventory, we're buying raw materials and then we're assembling it and changing its factor to be able to get finished goods that we can sell. So in that case, if I'm a manufacturer or a producer of some sort, I'm going to add up the cost of all those raw materials, plus the cost of production, plus the cost of direct labor to be able to make all of that inventory. And again, it's only the costs of the inventory that I have then sold. So why do we use it? Again, we use it for a number of reasons. One of it is just to make sure that we're making money on our products and services. So we'll take our revenue minus our cost of goods sold and we get what's called gross profit. Gross profit is the amount of money that we're making on the inventory that we've sold. The other reason we might want to use it and focus on cost of goods sold is just pricing. Given the cost that we have, how much do I have to charge for each widget, each product that I've sold to make sure that we're making money? And it's really key to understand that relationship because after we account for the cost of goods sold, we have a lot of other costs that we've got to pay for, such as overhead, taxes, interest if we have debt, and things of that nature. So for anyone that has cost of goods sold, we're selling a product, maybe even a service, we've got to make sure we're really keen on managing those cost of goods sold to make sure we're making money on the products or services that we're selling so we can pay for the rest of the costs in our company. So a calculation for cost of goods sold depends on, again, whether I'm reselling somebody else's inventory that I've purchased. If that's the case, it's just my costs, whatever I purchased that inventory. If I'm a producer, again, I'm going to add up what it cost for raw materials plus what it costs for direct labor, being the two of the biggest ones. And then if I've got to pay for machinery, it might include also things like depreciation and amortization of those assets, as well as maybe energy costs and things like that. So there's really no equation other than to add up each individual component to it. So cost of goods sold is critical to know because we need to understand if our prices are justifying all of our costs, and the major part of it is making sure we're making money on our products and services that we're selling.